Hello and welcome to the weekly outlook. We have got, excuse me, we have got quite a lot of data coming out on the calendar next week. Mainly, the main event is the FOMC rate decision, where we're expecting the US dollar to raise interest rates. Now, because there is quite a bit of data out from various countries, including the pound, the US dollar, the Swiss franc, and we've also got a little bit of data out from China as well, which could affect the Aussie. We are going to concentrate mainly on the pound US dollar currency pair and the euro US dollar currency pair. Now, reasons for that is we don't want to get confused with the amount of data which is being produced over this week. So let's start with CPI data we've got on Tuesday, which is expected to come in slightly better for the pound. We're not actually going to be looking to trade this. What we're really going to be looking for is to trade out of the US dollar FOMC meeting minutes. Now, we are expecting to see the FOMC raise interest rates to 0.75% from 0.5%. It's about a 93% probability of that happening at the moment, so it's fairly high. Now, what we've got to remember is the Fed have already raised rates once last December, and it's highly expected that they're about to raise rates again. And don't forget, the US dollar has strengthened considerably over the last 12 months due to this fact. And so this rate hike is mainly priced into the market. So I'm not really expecting too much more long-term US dollar strength, but what we might see is a spike in the pound US dollar down to lower levels before we start to see any reaction. So what I'm hoping to do is to actually buy the pound back against the US dollar and possibly some of the other currency pairs which are slightly weaker, such as the Japanese yen, which it's had a quite considerable rally against already. But to just to keep on the track of the pound US dollar, we're looking at round sort of areas of round about 123. Where you can see we've had considerable sort of resistance here, which then became support again. So I would like to see a spike down there on Wednesday evening, and that's going to be my opportunity to rebuy the pound. Now, it's not going to be a long term trade. We're looking at probably trading this over a couple of days, maybe to the end of the week, maybe just into the early next week. We're not really expecting the pound to get much higher than 1.3 this year, due to the fact that we've still got Article 50 to submit for the Brexit, and there's going to be some pressure on the pound coming into the new year, certainly leading up to March, April time. So I think the high of the pound is going to be capped around 1.3, and in fact that's where I'm going to be selling it again, leading into next year. But I do think that we'll see a bit of a retracement in the US dollar, and the pound is one of those currencies where the data has been exceptionally good, and I think it will succeed against the US dollar in the short term. Okay, now I do emphasise on the short term there, because we are looking at the pound selling off again coming into the new year when Brexit takes place. Okay, so that's my analysis on the pound. Now let's have a quick look at the euro. The most recent fundamental data that we had from the ECB was that they were going to extend their QE program, but at the same time they've dropped from 80 billion euros down to 60. So they've actually shaved off the size of the QE program, but they have extended it. Now the next thing that the ECB will probably do is extend that, bump that QE program back up to 80 if it doesn't start to show results on halfway through that QE program. But either way, the market did see it as dovish. The first announcement was the cut back of the QE program to 60, and that's where we had that spike up, and then sold off again as they announced that the QE program would be extended to December 2017. So at the moment, I'm still bearish on the euro, and again, we've got the US dollar rate hike coming up. Although the US dollar is overextended against most major currency pairs, the euro I feel has still got some way to fall, and I think parity is still definitely on the cards for the euro, which is over 500 pips away. I would like to see a push back up to areas of support and resistance before taking the trade. We are looking at this sort of area here, around about 10666. This would be my sort of sell position at the moment here. We've got the pivot point just above that, 10688. Obviously that will change when the the new week opens. But around this sort of price is where I'm going to be looking to jump into the euro for a sell, hopefully before Wednesday evening. So that will be the opportunity that I'm going to be looking at on the euro, and again looking to trade that down to parity over the coming months, especially as the euro, if the ECB announce that they're going to jack the QE program back up to $80 billion, then we will be seeing that for sure. Okay, so thanks for watching, and I hope you can make some pips.